Hello traders, welcome back to Your Nifty Guy. I hope all of you are doing well. In case if you are wondering why the market plan for next day is already on my charts, well, I'll hide it quickly. And it's simply because this is the second time I'm recording the same video due to some technical error. I believe half of the video had no audio. And thank you so much, Siddhesh, for pointing it out to me and I could rectify it. Uh, it looks clearly like not my day, but not a problem. We'll quickly jump on to our video. And yeah, so today it was a well-structured session in the market, and overall Nifty moved largely in line with our analysis from yesterday. The price respected key levels quite well, offering a few clean opportunities while also highlighting how important it is to stay patient and disciplined during intraday volatility. In this video, we'll go over how today's session unfolded, the logic behind the levels we discussed earlier, and what the market structure is indicating as we head into tomorrow's trade. I'll also share the key zones I'll be watching closely, along with the possible scenarios that could play out. If you find this kind of structured analysis useful, make sure to like the video, subscribe to the channel, also share your thoughts in the comments below. Try to share the video with your trading friends as well. And we'll quickly start with the analysis part soon. So today, what we had planned was for today's market that we'll be looking for a long opportunity above yesterday's high with a pullback. Now, markets opened with a gap up, went up, gave us the pullback. This was the first trade that I had taken at the break of this at 9:50. Now, when I entered into this trade, the logical SL was right below this particular swing. Markets immediately came down without moving in my favor. And had it triggered my stop loss, I would have exited my trade over here. But then out here, after it created a new swing and went up. Now, the l- most important thing to look around here is the kind of candles that started forming in this particular zone, right? Like when I always tell you guys to try to talk to Nifty, try to talk to the candles, what is happening and behind the scenes. These two candles show momentum and good buying, right? And these candles are showing the momentum fading away as well as actually indecision coming into play. This coupled with RSI negative divergence. So if you see markets making a new high, RSI making a new low. This making a I found myself in kind of in a dicey position. The options were not moving too great as well. And around this candle, around 11 o'clock candle is where I got out of the market, seeing this wick from the upside and red candle as well as the RSI divergence. I captured in total around nine odd points in this particular trade. Post this particular trade, because of the RSI divergence and spotting a double top around here. Try to see markets made a new high, made a higher low compared to the previous low, but markets failed to break above this high and also broke down below this low, right? So this is where I had entered into a short trade. Now, ideally, I should have waited for prices to actually come back below the 57, the zero point 0.5 to 0.618 zone of this entire move. But then keeping in mind RSI divergence plus a double top formation, this is where I had entered with a modest stop loss, which was just above this particular swing high. In terms of option premiums, the stop loss was just around 10 odd points. Now, markets went in my favor for some time, came up. Now, I was observant in the markets till the time markets was around here. Also, in this particular candle, when the markets again started forming a inside red bar. Post this, because of the Diwali pressure, which is there in my family business office, I got tied up with some work and I strayed away from the screen from my position. And the trade went against me in a momentum, and the stop loss, which should have been taken around here, is something which I took around this candle, right? Uh, so ideally, I'm very good with taking my predefined stop losses. I do not place any system orders because I am good with taking a swiping out an order in case if the market moves against me. And at all times before entering into a trade, I know exactly where my stop loss is. Like I said, when I entered this short, I knew that if market is going above the swing high, I am exiting. And I 100% take my stop losses. as soon as they are triggered. I don't wait in hope even one minute, right? But then again, I was on a call and not looking at the position when this particular stop loss got triggered in, matlab, as in on the system it got triggered, not on the trading terminal. And when I glanced at my chart and I saw that the initial loss that I had expected, it was double of that, I immediately exited the order and I took a loss of around 22, 22 points in this particular trade, right? So despite my first trade being a good not a very good trade, but then again, in profitable. This is the trade wherein I incurred losses, lost all the profits of the first trade, and also incurred some losses. And this is the after I took this particular loss, I closed my system. I logged out of my trading systems. Now, this is something which is a psychological point, and I always try to tell it to everyone I speak to on a personal level is that if you take a loss which is way beyond what you had expected initially, or way beyond your plan. Maybe it is because of slippages. Slippages can occur, right? Maybe the internet does not work. Maybe the broker stops working, right? So you get tied up somewhere. You get stuck up in an area where there's no network connectivity. Whatever may be the reason, but slippages may occur. And whenever there is a day like this, simply log out. Do not try to trade any further on that given day. Logic is very, very simple. You have seen the first trade, which is in profit. Now you will do whatever it takes to again get back to at least at cost, if not in profits. And for that, you will be finding unnecessary trades, right? So this is the problem. What happens with most of the people is even if you have a setup, you have a system, but then if you are hell bound on closing the day in green, you will be looking at unnecessary trades, and then that you will be taking unnecessary trades, and that will be ultimately leading to some big losses. And usually, if you take or trade any further on such days, your the loss amount that is on your screen is 80%, it will be increasing, right? So that was the reason I logged out of my system, and because of the work pressure that I had, I focused my entirety of my concentration on the work. And yeah, so that is it about today's trading. But in overall, a good trading day, good bullish sentiments. Bulls showed some real good power today. Markets did went up again, but then again, apart from this particular momentum move, which came in when I was in a short trade, the entire day the momentum was quite sluggish. But then nonetheless, if anybody would have hold on to like they say about diamond hands, HODL, hold on to your trades. If anybody would have been holding on to their trades, they would have got some very good profits. But then again, it's very difficult for me as a scalper to hold on to my trades for so long, especially when there is a lack of clear momentum. Overall, if you see the markets, yes, they have definitely moved a lot, but then on an intraday basis, on a chart basis, on an option premium chart basis, it is very difficult to manage such trades, right? So maybe I can take multiple trades, be a part of this rally in multiple ways. I take an entry here, get out here, then again, once the structure breaks, I take an entry again. That is something which is very, very fine with me. So yeah, that's it for today. I hope I have been able to clearly explain the two trades that I took along with the entire entry, stop loss, and everything, the psychological point as well. So in case if you have any doubts, please put them out in the comments box. And as far as tomorrow goes, so again, we are right now, ignore these arrow lines for now because I'll be explaining the trade setup. So we have now got a follow through of yesterday's bullish candle, right? And we are also above this major trend line. We have broken out of it, right? Now, because there was good momentum in the markets on the last 2 days, tomorrow I am expecting the markets to remain a bit sideways. Now, again, like I said, I'm simply expecting it, but then I'm not betting anything on it, right? I will be reacting to it once market opens and based on what is happening in the real market. But then again, this is how market actually operates is expansion in volatility and then leads to a contraction volatility, then again an expansion, right? So that is the way market usually moves. Uh, Market was in a range bound move around here, but then again it has broken out finally. So maybe it can go sideways. Maybe there's a sideways day tomorrow. Maybe we get a continuation. Whatever it is, I will be preparing you with all possible scenarios. So on a 4 hour time frame, this is a clear swing where sellers actually also got trapped. And This is the day's high, and this was the 0.5 to 0.618 zone of this entire swing that I had marked on the charts for tomorrow. Again, this is as per this high. In case if markets makes new highs tomorrow, we will have to adjust these levels accordingly, right? So do not make the mistake of having these levels as the only levels on your chart. And yes, on a daily time frame, this is the line that I have marked. So because a good amount of selling had earlier come in from here, and this is just 40 odd points from where we are standing right now. So a point of interest, that is the reason I've simply marked it out on the charts. Now for tomorrow's plan, again, the plan of action will be extremely simple for you guys. Number one scenario will be we break out above this with a pullback, we can take a long entry. That is the continuation trade. There can also be a trap-based trading that I always speak about. So last 2 days have been have been days of good momentum on the buying side. Now there will be many people who would not have participated in this particular move, and they will be having a major FOMO. And maybe they enter into long trades at the start tomorrow. Maybe we open flattish, slight gap up, and then we break out above this. So in case if around the opening we get a candle which is extremely bullish in terms of sentiment. It can be a hammer, it can be a good bullish engulfing, whatever it is. It can be a big green bodied bar, it can be a wick from the bottom showing buying strength, showing buyers entering, and then the low of the candle gets taken out, right? All these conditions needs to be fulfilled, just like around here. Markets opened, went up, low got taken out, we got a good move on the downside. So that this is a simple trap setup wherein people who would have longed around here, and once the market goes back below this, all their stop losses get triggered and we get a good move on the downside. Simple scalping trade. It is against the primary trend, right? The primary trend is buying right now, right? The structure is screaming buy. But we are taking a contra trade. The benefit of this particular trade is we get a very small stop loss and the rewards can be good because this is based on traps. So all those once the market triggers these stop losses, markets moves in with a good momentum and you get the points that you need in a very short amount of time. So this is trade number one. And then this is the support based on the 4-hour fib level. So any time we are around these and we spot some buying, good bottom, double bottom structure, we initiate a buying trade around here. This will also be a retest of this trend line. And then I'll be looking at any short entries only below this. Ideally, we can also look at short entries below today's 50% to 6.8 levels. But then again, because the buying has been continuous, to be on the safe side and not to get trapped on the wrong side of the market has actually broken out, right? Try to understand this is a key level. This trend line is a key trend line which has been coming in since the month of Jul almost July, right? Almost July till September, October. We are in October right now. So yeah, it's a good trend line and we have actually broken out of it. So the main bias is on the bullish side. So we'll be keeping it simple and yeah, trade light for tomorrow. It's the last day of the week. We are heading into Diwali. Don't spoil your mood. Enjoy the festivities with your family. And yeah, so that's it for today's analysis. I'm sorry if you guys have to watch the video again, and extremely sorry for to the people who have had the pain of watching the video without any audio for half of the video. Um, I had feared that something had gone wrong with the microphone, but then I paid no heed to it. Again, that is the price that you pay for your recklessness, like I paid in the morning for the trade wherein I was in an option buying trade and I waved wandered away from the screen, and that is why I took an SL which was twice the size of the initially planned stop loss. And this is the price that I pay here, recording the same video again. So yeah, I hope this breakdown helps you prepare better for tomorrow's session and approach the market with more clarity and confidence. Remember, consistency comes from discipline, not prediction. If you found value in this video, do like, share, and subscribe to the channel. I'll see you in tomorrow's analysis. Until then, trade safe and stay focused. Cheers.